Welcome everyone. In today's video, I want to talk about Pinterest, a company that I believe is currently undervalued and could offer huge returns in the future. If we first take a look at the stock price, as you can see, this company has performed horribly in the past 5 years, being down 62%. It reached an all-time high in February 16, 2021 of $85 per share. And since the past 3 years, the stock hasn't really moved a lot. But I believe we can see the company back at all-time highs at around $85 per share in a couple of years. And as you can see, the market cap is currently $17 billion and they are currently generating $4 billion in revenue. Analysts have them rated as a buy with 50% upside. Now, if we take a look at the P, it is currently 9, although the forward P is 14 because profit is expected to drop next year. But even at 14, it seems quite cheap for this company because it has grown massively in the past 10 years. As you can see, it has grown from $472 million in revenue to $4 billion currently, and they are growing high double digit in the past couple of years. And by the way, we'll talk later more in depth about the valuation with a discounted cash flow model, but for now, let's keep focusing on the financials. Now, regarding their profit, their net income has also seen massive growth in the past couple of years. As you can see, this used to be a non-profitable company, and they are now generating $1.9 billion in net income. Now, this is a company that currently has less free cash flow at $1.1 billion, although, as you can see, a clear growth trend, and I expect free cash flow to match net income in the future. Now, regarding their margins, they are actually amazing. As you can see, gross margin is near 80%, profit margin is at 48%, and free cash flow margin at 27%. But again, I expect it to catch up with net income in the future. And if we take a look at the financial forecast, analysts are expecting tons of growth regarding revenue. As you can see, double-digit revenue growth for the next 4 years. Now, regarding profit, it is true that it is expected to decrease this year to $1.73 per share, but then it is expected to grow very nicely again at double digit to $2.66 per share, although I think they are going to grow a lot higher because we have seen that their margins are amazing. And also, a quick math here. If you apply an 18p to those 2028 earnings, it would make it around a $47 stock, meaning 80% upside from current levels, so 20% annual returns according to analysts, which is very good. We have already seen that their financials are very good, but what about their fundamentals? Now, as you can see here, and we've already talked about this, revenue is growing high single digit, 17% in the last quarter. US and Canada, it grew 9%. Now, if we take a look at Europe and the rest of the world, in Europe, it grew 41%, in the rest of the world, 66%. In these parts of the world is where I see a huge opportunity with this stock. Now, as you can see, also, monthly active users is growing. Global 12%, US and Canada 4%, Europe 8%, and rest of the world 16%. But if we take a look at the average revenue per user, this is what I see a huge opportunity. Now, as you can see, it grew 44% in the rest of the world because the average revenue per user is currently only 21 cents. And if we take a look at the US and Canada, it is currently $7.64. Therefore, as the rest of the world becomes more and more developed, like the US and Canada, this average revenue per user is going to be higher and higher, which is going to drive revenue in a huge way. Now, the same goes for Europe. As you can see, it is currently at $1.31 compared again to the $7.64 of US and Canada. And globally, they have $1.78 per share average revenue per user. And if they manage to drive this up to $3, let's say, combined with their high margins, this is going to be a profit machine. Because keep in mind that social media platforms are extremely lucrative as they get most of their revenue from advertising. And moreover, Pinterest also has an amazing balance sheet as they have $2 billion in cash and $205 million in debt, which is nothing for a company that has a market cap of $17.5 billion. Now, because they have so much cash, you have to add certain value to that. And actually, a lot of investors would say that the company is actually worth $15 billion because if you buy the company with all their cash and debt, this is what it would be worth. Now, looking at some other important statistics, as we've seen before, the forward P is 14, price to sales is 4, and price to free cash flow is 15. So everything so far looks amazing. And by the way, if you want a discount code on stockanalysis.com, which is where I've shown all the stock data, you have my code in the description. They also have a completely free market newsletter, which I will leave in the pinned comment as well. But now, in order to take a deeper look at the valuation, I use my Google Sheet. This tells me at what price you should buy your stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $27 per share, middle $42, and high $62. And because the stock is currently trading at around $26 per share, this means that if my low assumptions occur, you would get a 10.5% annual return on your money, middle 19%, and high 27%, as you can see right here. Now, I actually believe I made some reasonable assumptions as I have Pinterest growing between 6 and 12% annually revenue for the next 7 years, which is less than what analysts have them expected, averaging a profit margin and free cash flow margin between 25 and 35%, which is around what they have been doing, and I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Now, the reason that I put 10% in order to calculate intrinsic value is because this is around what the market gives you. And therefore, if you decide to invest in an individual stock, you should desire a higher return because it has a lot more risk. And I believe honestly that Pinterest could be a compounding machine in the future. We have a company that is growing both profit and revenue at a very fast pace, amazing margins which is going to drive profit even faster, and with an exceptional balance sheet. Another very important statistic is that this company is only a $17 billion market cap, meaning it still has a lot of room for growth. It actually reminds me in a way of SoFi when it was trading at around $7 per share, which I recommended buying on this channel, and since then it has done tremendous for over 300% returns because it was a small cap company with amazing margins which still had a lot of room for growth. And this is what I think about Pinterest. I hope you found this video valuable. Let me know what you think about Pinterest stock in the comments, and I'll see you in the next one.